Hey subscribers, thank you so much for joining me today. I am Jeremy, this is the Financial Education Channel, and today we're talking about the top 10 stocks for the rest of 2017 going into 2018, guys. So basically we're almost halfway through the year. We got about another month left and then we'll be halfway through 2017. So as I look out for the remaining 6 months of 2017, 7 months of 2017 and into 2018, I try to find 10 different stocks. Some are big companies you probably are aware of. Some are smaller companies you probably never heard of. 10 companies that revenues and profits are going to be going up drastically over the next year and a half, barring, something really bad happening in the global economy, which obviously, if something bad happened out there, all these stocks would get nailed, but every stock out there would pretty much get nailed, guys. So, and also, I didn't put any stocks I actually own right now into this list. Main reason was it kind of challenged me to find 10 companies that are going to have exploding revenues and profits that aren't anything I own. And two, I just talk about GoPro and Wynn Resorts and Google and Starbucks enough already on this channel, so I don't want to just fill this list up with stocks I own as well, guys. So here we go, counting it down from number 10 down to number 1, and I hope you guys enjoy. Coming in at number 10, guys, is Cirrus Logic. Cirrus Logic is an audio chip maker that makes semiconductor components that go inside mainly smartphones, but they also make other type of chips that go into basically anything that you can talk into. So they're competing mainly with Qualcomm and also another company named Maxim Integrated Circuits. They also compete a little bit with Texas Instruments, but their main competitor is Qualcomm. And so when you talk into your phone, that has to go through a semiconductor chip, all that information, and then come back out to the other person. When you say something like, hey Siri, or hey Google now, and your device just activates and it's listening to whatever you have to say, that has to go through a semiconductor. The semiconductor it goes through is a chip like Qualcomm makes or Cirrus Logic makes. And Cirrus Logic is big time with Apple. Apple makes up about 70% of their revenue. Now Cirrus Logic is in a perfect position because they've just expanded content into Apple, which content meaning how many chips go into these Apple iPhones, drastically over the last couple of years. Just last year, net income over doubled, guys, over doubled last year. And anything voice related is exploding right now. Everywhere you look, voice is becoming a bigger and bigger thing, guys. Think about Amazon Echo. What do you do with Amazon Echo? You talk to Amazon Echo. Think about, some of the newer features in the iPhones, in any phone basically, where you can just, say, hey, a command to the phone and ask the phone whatever you want to. What was the score of the baseball game last night? What was the score of the football game last night? What's the top news stories? All these kinds of things, guys. Those are all going through a semiconductor, which is directly related with what Cirrus Logic does. So they have a business model that is just perfect right now. It's just absolutely perfect, guys. They also have things like amplifiers, which kind of, make the sound louder and whatnot. Smartphone makers are trying to make their phones louder and louder. So they're in the prime position of exactly where you want to be. Mobile devices, which is what it's all about nowadays, right? Mobile devices, and then they're in the voice side. So it is absolutely perfect, and that's a company that's revenues and profits should just keep drastically going up over the next year and a half, guys. That's number 10. Number nine is Amazon. Amazon, the big Goliath beast, guys. So Amazon has two things really going for it drastically right now. One is the retail dominance. They're stealing market share of retail from almost every single retailer out there right now, guys. Whether they're big retailers, whether they're small retailers, the amount of people that are ordering more and more on Amazon is going up drastically. People that might have just, like myself, that might have just ordered 1 or 2 things per year a few years ago are now ordering 1, 2, 3, 4, 5 things a month on Amazon. And we're not going to as many big box retailers. We're just ordering right on Amazon because it's easier. And a lot of times they have a better selection. Well, they always have a better selection, right? Pretty much. And a lot of times their price beats everybody else's price. So Amazon is in the prime position with retail dominance. And then on top of that, they have the Amazon Web Services, which is taking drastic amounts of business related customers. They have phenomenal business solutions for small companies, mid-sized companies, and huge corporations. So they're kind of dominating in these two areas. They're growing profits by over 30% a quarter basically right now, guys. Revenues are going up 20+%. Even though they're so big already, revenues are still going up 20+% per quarter. So phenomenal growth out of them, and they're absolutely the retailer of the future and of the now, guys. So a lot of great things going with Amazon. That's why it's number 9. Coming in at number 8 here, guys. Coming in at number 8 is Tesla. So Tesla is going to have their revenue explode over the next year and a half. Absolutely, their revenue is going to go through the freaking ceiling, and their revenue has been going through the ceiling. Their profits might not, they might still be unprofitable, and I actually expect them to be unprofitable into 2018, but their revenues are going to go up ridiculous amounts, guys. Think about this. Here this summer in 2017, and if you're watching this, months in the future, they might have already launched it. But basically, in this summer, 2017, the Model 3 is going to launch, right? The Model 3 has billions and billions of dollars of people have already ordered Model 3s, put their $1,000 down payment, so they get their spot in the Model 3, guys. Billions and billions of dollars of backlog. The Model 3, as production ramps up, the revenue is going to go through the absolute roof for Tesla. So you look at Tesla over the next year and a half, and that's going to be, one of the strongest revenue growth engines out there, especially for anything auto related, guys. So Tesla in a phenomenal position, and that's why it's number 8. Number seven here is Monster Energy. It used to be known as Hanson's Natural Beverage many years ago when I used to own the stock. Monster Energy is in a great position right now because they have basically here in the United States and most of the developed world, energy drinks as a category are still growing. They're not growing as fast as they used to be, a half a decade ago or a decade ago, but they're still growing at about 5%. So they have that going for them. They have a lot of new products launching that, they've come up with and whatnot. And then the main thing with Monster is they now have a big distribution with Coca-Cola. Coca-Cola bought a bunch of Monster stock a few years back, and now basically they own, I think, around close to 25% of Monster is owned by Coca-Cola now. So Monster's in a position where their gross margins are actually, going up. I believe their gross margins are now over 64%, which is a phenomenal gross margin, with a lot of help because of the Coca-Cola distribution, being able to distribute it a much wider base, being able to get costs for a lot cheaper, raw materials, all those kinds of things, guys. More buying power now Monster has than ever. And then they're just really, they've kind of been international for, a half a decade now, 6-7 years. But they haven't really gone in these markets huge like they can. Coca-Cola, now being a huge partner with Monster, can push Monster all across the world into some of the emerging markets, into some of the Asian markets that have hundreds of millions, billions of people out there that could be potential consumers of Monster Energy. So you look at it and it's kind of a perfect storm for Monster mainly because of the Coca-Cola distribution, and now Monster having a worldwide type distribution to all different retailers all over the world through Coca-Cola's funnel, guys. And it's in Coca-Cola's interest that Monster does good because Coca-Cola has such a big stake in Monster Energy that I'm sure someday they're going to want to sell off for a huge profit. They're already up huge on that position since they bought in, and I'm sure they want to make a lot more money when they sell it, who knows, 3 years from now, 5 years from now, 10 years from now, or maybe they just hold it forever and it's, worth, 10, 50 billion dollars. You never know, guys. So Monster Energy, absolutely the reason that is number 7. Number 6 here, guys. Number 6 is AMD. AMD has a couple things going for it. One is they have basically a monster amount of new chips that have already launched this year and are expected to launch in 2018. So a ton of new chips out there for AMD. But the main thing with AMD is this is a company that hasn't been profitable for a very long time. However, analysts are expecting them to eke out maybe about a 6-cent profit per share, which would be a fabulous thing for AMD. And that's this year. But the main thing is in 2018, analysts are expecting them to rack in about 30 cents per share in EPS, which would be ridiculous growth. When you go from basically being unprofitable, losing mass amounts of money, to then all of a sudden earning 6 cents per share of EPS, to then all of a sudden earning 30 cents the next year. If AMD can do that, guys, this is an absolute growth monster. So between the new chips and between them, expecting to be profitable, and then for that profits to explode over, 2018, that's definitely a stock that deserves to be on this list. Number five here is Alibaba. Alibaba, the biggest e-commerce play in China, right? The biggest. They're like the Amazon of China. They have a different business model than Amazon, They're kind of like, in my opinion, they're kind of like in between an Amazon and say an eBay. That's kind of Alibaba's game. So it's a direct play on the Chinese consumer and the rise of the middle class in China, which we see is a massive amount of people starting to come into the middle class looking to spend money now. They actually have jobs that pay decent wages, especially when you consider what Chinese wages were 5 years ago, especially what they were 10 or 15 years ago. So more money than ever the Chinese consumer has. And where's their number one place to spend that money? Alibaba. So Alibaba's in a perfect position over the next year and a half and moving forward after even that to capitalize on the Chinese consumer. And this is a company that's growing revenue right now over 60% year over year, 60% revenue growth. This is a huge company, over a $300 billion market cap. To be growing at that type of rate is absolutely amazing, guys. And then you look at the fact that profits, analysts expect profits to double over the next 2 years, from basically about $2 and some change to over $5 EPS 2 years from now. So this is a stock that's set up to capitalize on the Chinese consumer, capitalize on basically all this revenue growth they have coming in, which is a 60% at the moment, and then capitalize on what is expected to be profits exploding over the next couple years, guys. So Alibaba absolutely deserves to be on this list at number 5. Number 4 is Apple, Apple Computer. So Apple is in a really good situation right now because what they have is later this year, they're going to be launching the 10th generation iPhone, the 10th generation iPhone. That's going to be huge. There's a massive amount of consumers that already own Apple iPhones that have been holding off, like myself and my wife, have been holding off. We have iPhone 5S's. You know, some people have iPhone 5s. They've just kind of been holding off to get something that's really special from Apple. The 10th generation iPhone is supposed to be that special device that people can buy and then they don't have to upgrade for another 3, 4, 5 years, guys. So they're in a phenomenal position with that 10th generation iPhone coming out this year. That should just dominate any numbers iPhones have ever sold. It should just kill any numbers. It should be the biggest growth in iPhone units probably since iPhone 6 came out. So that's one thing they have going for them. Another thing they have going for them is the services. The services is now the second biggest part of their business. Services meaning you buy an app on your iPad or your iPhone or whatever. You buy some music. Maybe you have an Apple Music account like I do. Maybe you have storage with Apple in iCloud. You pay $5 a month for, $10 a month for, $1 for, whatever. All those type of things. Maybe you stream Netflix. Apple makes money if you buy the Netflix app. All these kinds of things, guys. Apple makes money from, and now that's their second biggest business, and it's their second biggest business that's growing 20% year over year right now. So phenomenal growth, and that's an absolute profit machine for Apple. So that should keep helping profits exploding over the next year and a half. And then you look at Apple Watch. Apple Watch kind of came out of the gates a little slow, but has really picked up. Apple Watch sales in the last quarter were double what they were the previous year over year, double. So now that's a device that's selling millions of units. Now it might only be a 300. Why did I look at my wrist like I got an Apple Watch? I don't. It might be a device that might only sell for $300, $400, but and it's not like a huge business for Apple. If that was any other company, it would be a huge business, right? But when you take an Apple Watch, good gross margins on that. And it's just one of those things that could maybe push up EPS. Maybe they make an extra $100 million in profit from that, $200 million, $300 million. Not game changing for a company's Apple size. However, it's just something that will keep pushing EPS up a few cents per share, which helps them beat analyst numbers. And you look at things like the EarPods, headphones, things like that. They're capitalizing on all those markets. Not huge businesses for Apple. However, they're kind of market leaders in those businesses, and that's just going to keep helping push up those profits and push up those profits. So Apple over the next year and a half is absolutely primed to have a phenomenal next year and a half, guys. Number three, Nvidia. What does Nvidia have going for it? They're exploding profits right now. If you look at their profits year over year, it's up massively, guys, massively, 50+% profit growth year over year, and they've done that for a couple of years in a row now. absolutely amazing, the profit growth out of them and revenue growth. But the main thing with Nvidia over the next year and a half is they're on the forefront of self-driving cars. We just talked about Tesla, the Model 3 launching, right? And how that's going to push up all Tesla's numbers, which Nvidia is directly related to Tesla. They have their chips are in the Tesla cars for auto driving, artificial intelligence. This is huge for self-driving cars. So artificial intelligence, why do you need artificial intelligence in a self-driving car? Well, because you can't do software. You can't just put in software. If the street stayed the same and no one ever walked into the street and the lights all work the same, you could just run a software program that says, hey, this is the map of the street, the car can drive this way. You can't do that with a self-driving car. You need artificial intelligence, because guess what? All of a sudden some kid runs out in the road, and if it's running on software, the car is not going to know to stop for that kid. But if it's running on artificial intelligence, you can recognize there's a kid coming in the street, let me change lanes, let me stop the car, let me do this, let me do that. There's a bicycle rider over here, we need to watch out for them. The light just turned yellow. There's cones in the road, so the normal traffic pattern can't go in the normal traffic pattern, so I need to move the car over here. All these type of things that a human, we can think about, we figure out, we just see that and we're like, okay, we need to do this and do that. Computers can't do that. Computers run on software. If the system's messed up, a computer running on software can't figure it out. A computer running on artificial intelligence can. So Nvidia is absolutely going to capitalize on being in the front of the forefront, basically, of self-driving cars, and basically anything that involves artificial intelligence, whether it be computers, anything in the future that needs to learn how to adapt and how to change things for the better, guys. So Nvidia's in front of all that. They have exploding profits right now, and they look like they're set up for not just a great next year and a half, but for next great 5 to 10 years, guys. So phenomenal company there. Number 3, Nvidia. Number two is not just one stock, it's a group of stocks. It's the home builders. Home builders are absolutely set up to have a phenomenal rest of 2017 and into 2018, barring anything major happening in the economy. So what do the home builders have right now going for them? Well, they have all that excess inventory in some markets that was built up, in the mid 2000s, where things got overbuilt, right? All that inventory got eaten up over the last few years, and now all that inventory is depleted. So home builders could really start, building and building and building over the last couple of years. And we have mortgage rates super low, so definitely want to get buyers in there. We have a lot of the credit restrictions kind of easing back for home buyers now. We have a lot of companies that are kind of getting a little greedy with things again. They're just trying to get the people in there, regardless of credit scores sometimes and some of those kinds of things, guys. We have a U.S. economy in the States here that's solid. It's not gangbusters right now, but it's a solid economy, which is great for home builders and great for home buying confidence. And then on top of that, we have basically a situation where these home builders are figuring out ways to get much higher prices for their homes than they used to get many years ago, because they figured out ways let's add this countertop here. We can get way better margins on that if we add a fancy flooring here. So the margins these home builders are getting are absolutely phenomenal right now, guys. So all the home builders are set up to have a phenomenal 2017 into 2018, and that's why they're number 2 on this list. And number one on the list, guys, is Facebook. Facebook. This is a company that has been growing users still pretty strong, and they should continue to grow users pretty strong until the back half of 2017 going into 2018. User growth will slow a bit, in my opinion, around that time. However, what they're going to still have going for them, even if user growth slows, is basically they have a profit machine in advertising, and almost every dollar that comes in almost pretty much goes straight to net income. Every extra dollar that comes in goes to that net income line. They grew profits last year, for instance, year over year. The year before, they did $3 billion in net income. Last year, they did $10 billion, guys. This coming year, they're expected to do something between a $15 and $20 billion net income line. They're exploding net income on a massive scale, and that should continue for at least the next year and a half, because they're playing catch up, especially with the Instagram platform. Facebook really didn't start monetizing the Instagram platform and take it seriously until about 2015. And you have, 600 plus million people using Instagram right now that are going to be seeing more and more and more ads from advertisers that say, you know what, that's pretty cheap. And you have ad rates that should be definitely going up over the next year and a half. So not only do you have more advertisers wanting to advertise on the platform, but now the amount of advertisers are going to have to pay a steeper and steeper price to put ads on the platform. A phenomenal thing for Facebook, and guess what? That money just goes straight to that net income line pretty much, guys. So over the next year and a half, despite what I believe will be user growth starting to slow in that company, profits will continue to explode 50 to 100% plus a year, guys. And that is going to make Facebook an absolute stock that people just view as like, you know, the way Google was viewed and still is kind of viewed as a profit machine. Facebook's taken that to a whole new level here, guys, as far as profit machine goes. So those are the top 10 stocks for 2017 and 2018 based upon what their revenue's looking like, based upon what I see their profits coming in, those kinds of things, guys. So I hope you enjoyed this today. We didn't talk about PE ratios or balance sheets or any of that stuff. That's a different type of subject. We're just kind of looking at it from a perspective of what are the revenues going to be, what are the net income going to be over the next year and a half, are they going to be that strong, and those kinds of things, guys. So I hope you enjoyed this today. If you really did, hit that thumbs up button. I would love to hear in the comment section on what some of your favorite stocks are for 2017 and 2018. Love to hear your guys' opinion on that. If you just came across this channel, you may want to subscribe. We talk personal finance, we talk entrepreneurship. I'm an actual business owner. I give away so many business tips. We talk the stock market more than anything. Thank you for watching, guys, and have a great day.